Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's talk about BTC and ETH, the big two. Seems an appropriate time as ever to go over what's happened over the past 24 hours. What are some potential things to look for going forward? Make sure all your limbs are intact, organs firmly sewn back in, that sort of thing. So we've had 9 billion in 24 hours liquidated, mostly on the long side, obviously, with price going down as much as it has, as quickly as it has. And based on the data from BYBT.com, the largest liquidation by far, liquidations, were basically this $3 billion Huobi long liquidation total. The rest of that, a mixture of Bybit, OKEx, Binance, BitMEX. There's some rumor floating around about the PBOC trying to liquidate some whale on Huobi. I don't know if it's true. I don't care. Just save yourself a comment. I'm aware. We can't expect hopium off of manipulation like that when the number goes down. But what we did have was a series of just quick margin cascades. I went to bed last night around 39K, which was like 4 a.m. EST, something like that. We looked okay. I bought with the Enzyme fund. I bought some personal BTC. Didn't really touch any alts. Didn't set any bids. None of that. And I wake up. We wicked to 30K. I mean, it was just crazy stuff. DeFi as well. Massive liquidations across the board. 631 million over the past 24 hours. Now, both of these numbers may not sound that big in the grand scheme of things, but it's the swiftness at which they came. And the DeFi stuff was working as intended. It liquidated things that needed to be liquidated. But the issue is if people can't provide additional collateral, if they want to provide additional collateral for their loans, they get liquidated. And then you get this margin waterfall cascade and everybody's basically long. You get this long squeeze. And across the board, we have these massive wicks down on everything. There's just no liquidity on the bid side. There's not enough to support that quick of a drop. That is just basically market selling everything. So that's an issue. And we saw that this was 9 a.m. EST when gas prices spiked very quickly. Basically when America was awake, except me. I didn't wake up till 11 a.m. Lucky me. But gas prices spiked very quickly to the highest maybe they've ever been. I don't know if they've ever been that high. I guess they have been that high. Looks like, no, this can't be right. It's gotta be an all-time high for gas prices, I assume. So things got insane very quickly. It is cooling down. Gas prices are still extremely high, but definitely lower than the insanity that they were at. The other issue here is if you're trying to send ETH on chain or do anything on chain, you basically just get run over by someone who's bid higher. Fees are all over the place. It's a mess, right? It's unusable effectively. Beyond even now, no one wants to pay the fee. I don't want to pay the fees that I have to pay now to do anything on ETH, let alone when gas was what it was at, right? So let's talk technicals. This is the 2-year MA multiplier on BTC. The green is the 730. The red is 5 times the 730 MA. Historically, we have exceeded the multiplier at the past 3 all-time highs. We've exceeded the MA on the downside anytime it was a buy. And there still are some whispers of 2017, but the difference this time is we didn't consolidate for as many days as we have been up here, 90 days or something like that on BTC. And going forward, a bounce would require a V-bottom. If we V-bottom back to 55 plus, then it's game on, right? We can go to 120. I'm confident that we can go to 120 if we can V-bottom to 55 plus. I'm not confident we can V-bottom to 55 plus. So keep that in mind. That's part of the decision tree now. The strength of this bounce is going to tell you, I think, if all-time high is back in the cards for the remainder of the year. A lot can happen. There's many months left in the year. But if Q3 is historically bearish and Q4 is bullish, I think if we go sideways through Q3, we have potential of doing something in Q4. We can only have so many 50% drops before we just start over. So you're either looking for a V bottom here, or you're kind of just sitting waiting I mean, if we see anything below 22, which would be gross, but anything that gets remotely close to this MA, 730 MA, has historically been a buy. Anything below that. So keep that in mind as well. Just because, I don't think we're going to go there. I didn't think we'd go to 33K, but you got to look at these supports on the downside to see what's even left. So at this point, it's possible but unlikely we will exceed this multiplier this year. Keep that in mind. It is a shrinking branch on the decision tree. If we look at the pitchfork, pick 3 points, we get a rate of change, VPVR, yearly pivots, RSI, MACD. Looking at all this together, we did bounce basically where we should have if we were going to sell off, which is the median line of this pitchfork. Hopefully you've heard me say this a billion times, but the median line for the trend is the magnet. So if we have a rate of change, this is oversold, or this is overbought, this is oversold, and this is where price wants to live most of the time. We're now below the 200-day moving average, 200-day EMA. So we are significantly less bullish than we've been since even May 2020 based on that trend metric. However, we're still inside of that pitchfork. We're pulling back up to semi-yearly pivots. So there are some levels here. The question is, are the margin cascade waterfall situations going to continue? I think it's going to be tough for those liquidations to get bigger than they were this morning, last night. This is reminiscent of a capitulatory wave where everything kind of breaks down, exchanges break down. You're getting wave after wave of selling extremely quickly, rapidly. So I think you'd be hard pressed to get any more bearish as quickly as we are right now. So I think you have to take that into account, regardless of how this looks on trend. We're down 50% from the top. We're down 30% in the past 7 days, or 50, whatever it is. We're down percentages that are just stupid at this point. And is the network broken? No. Is everything still intact? Yes. That's always my true north. If the network is working and we're not being attacked by somebody, then we're going to be okay. Things are going to be okay. So we wicked into the median line. Great. There's really no relative volume support until, again, at 33, and then below that, sub 20, basically. RSI has had this curvature to it, and currently we're basically at the Corona March drop on RSI. So to me, does it feel like we're as bearish as that was bearish? No. So to me, there's a sentiment mismatch there. Personally, I don't know. Maybe I'm the only one. Now, there isn't yet a bull div, which would be what you're looking for here. Basically, 2 days from now, we'll start to see a bull div if we see one on any lower low in closes versus a higher low in RSI. The same thing with MACD. So both of which are surging in oversold type territory relative to where we've been over the past year and a half. Let's do some other trend comparisons to 2017. The green line here is the 20-week SMA, which historically we bounced from in 2017. And the weekly Kijun in the red here, which historically in 2017 we bounced from. Currently we're below the 20 SMA, above the weekly Kijun. What we don't want to see, what I never want to see, what I feared we would see in 2017 was any price action below the weekly Kijun, because the weekly Kijun should represent, or on any time frame, the Kijun represents a mean reversion. So when we go below that and above the cloud, it is completely mismatched as far as what the trend is trying to tell you. And you can see as soon as we did, it was over, right? Now we didn't know necessarily it was over until months later when this finally went below the cloud, right? So we won't know until probably September, what this really is going to turn out to be. But if we look good into Q4, again, keep in mind, Q4 has been the most bullish quarter for BTC. But what I don't want to see is a break below this weekly Kijun, because the downside, it's just a dark abyss, right? It is a black hole of no support here on the weekly cloud. So it's a very tough trade. Even now below the 20-week SMA, very tough trade, because historically that has been excellent at predicting trend. You can say maybe it got a little messy in March, which it did. So something else to watch for would be a break above the 20-week SMA, which is currently around 48. So back to my previous statement about V-bottoming to, if we V-bottom to 50 plus, then yeah, we're probably going to see a new all-time high very shortly after that. But until we actually see that V-bottom, it's hard to say, yeah, this is what's going to happen. Here's the Coinbase cloud on the daily. They had a bit of a mismatch earlier today with a $3,000 premium. So again, there's some weirdness on both sides of the order book here, just very low liquidity. And you have people FOMOing in both ways. So keep that in mind. But the price is below the daily cloud now. I've been mentioning and discussing this edge-to-edge trade. Unfortunately, I didn't myself get positioned well enough for this because the down candle happened on Elon's tweet. I was eating dinner at the time. And I thought, great, there goes my short entry. It looked like it was leaning towards a short entry. And then the entry where I wanted to enter at around 55 just blew past me. And I thought, okay, this is over, right? The downside is basically going to be the cloud and the 200-day moving average. So last night, we're at 39. I think we're fine. And then I wake up to 30. And here we are, right? Again, we're sort of in this no man's land of support where trend metrics are telling you on multiple different ways the bull trend is definitely over. So we're in more of a limbo than we even were in the cloud because we're so oversold so quickly. Taking a short here, to me, feels extremely silly. Certainly much sillier than it did at 50, just based on the percentage that we're down here. The daily cloud is bearish for the first time since May 2020. The good news is, the silver lining here is the long entries in the future, should we get them with price above cloud, cloud bullish, will be so stupid obvious, so easy to take. Again, if we get above the 200 with a bullish cloud, with a bullish TK cross, right? Like this is textbook, picturesque, bask in its glory. This is what you're looking for on any entries, either a break of the 200 to the upside or price back above the cloud. When you get both, that's the best you can get, right? And we can see in March how long it took us. The Bitfinex hack in 2018, very similar. It was a slow grind up, but it was a V bottom in that case. And we did break back above the 200 period moving average. So this may take 2 or 3 months, right, to get back. This may take all of Q2, the rest of Q3, and we may not see anything bullish until Q4. So keep that in mind. Be patient for sure. Not investment advice again. So here's another way to look at that on low time frames. If you're looking for trades, the 6 hour, I'd look for a bull div. So any lower lows in price on less momentum. There's already arguably a growing bull div on RSI and MACD as we're just parabolic downside on equal momentum or less momentum. So there's definitely waning bearish momentum here. VPVR is telling you there's resistance at 48, 49 and mega resistance at 56 at this point. So another way to think of that, if we can get back in this range, I think we all can safely get bullish again. But keep in mind, today at this moment, 3:55 p.m. EST, definitely hopium that we're going to get back there anytime super soon. Another way to look at this on low time frames is to look at the 4-hour alligator fractal. So this is the 5/8/13 EMA, currently flipped bearish. These fractals tell you short entries in this case. Any price close below this fractal is a short entry because we're bearish. Any price close above the green fractal is an exit of your short. Currently the stop loss for this is at 46K. Again, that number 46, 47, 48, anything up there and we'll look okay. I expect us to probably retest it in the next 2 weeks and then make a decision. This probably isn't going to reverse turbo in the next 48 hours. It's going to take some time. And we'll probably get another fractal print at around 41K, at least on Coinbase. And that will be the new trailing stop loss for any shorts at that point in time. So those are definitely the trend metrics to watch if you're trading low time frames or looking for something to watch on not the daily or the weekly. I'll go through the lookintobitcoin.com stuff real quick. 200-week moving average heat map never got overbought. I mix those up all the time. Never got overbought like it did 3 times prior. More of a rounded top situation. The Wyckoff distribution people are having a party in the streets because they're able to say, and we were watching this for a long time and mapped it out, and it happened. I think they would also tell you it happened probably faster than they even anticipated as far as the breakdown is concerned. Puell Multiple, which is a metric for notional coin issuance per day versus the past year. Again, historically, we've topped out at above 4, and currently that's way down. This isn't even updated for today, so this value is going to drop even further. And again, reminiscent of not even 2017, but 2016, where this multiple gets way, way low. And historically, anything down here has definitely been a buy zone. I don't think the miners are feeling crunched. I don't think they're panicked. I don't think they're even close to a break even here. I think they're way in profit still. So I don't think there's some mass miner concern that they're going to sell off anytime soon. And the on-chain movements I've seen are mostly short-term holders. They're not long-term holders just yet. Now that may change in the next week as that data rolls in. But from what I've seen so far, it hasn't been long-term holders cashing out. We're not seeing Bitcoin days destroyed explode just yet. Speaking of mining, hash rate plus 21% difficulty adjustment a few days ago, and we're due for another positive in 9 days. Now this may change with price as well, so keep that in mind. But when we're bearish for an extended period of time, we do see hash rates adjust. This was arguably rainy season in China or something China related. That's why it reversed so quickly. But miners from that front look fine, right? There's no concern here. Stock to flow, I'm just going to show it and not necessarily talk about it, but stock to flow has us wanting above 80 basically historically. Currently pretty far below that level. Pi cycle top, I'm only going to talk about it because people are going to ask me about it. But historically, this MA cross, the 111 and the 350 times 2 MA cross, just basically a back-tested cross, has picked the top the past 3 times. Arguably, it picked it again. This was the only metric that said sell here. The only metric. Everything else that I'm looking at looked fine. So even in a rounded top situation, if this is the top for the next however many years, this was still able to pick it out. Even though to me, this looked okay. This is when we were ascending triangling, and then that failed. So this crossed even before the ascending triangle failed, which was impressive. But it's currently uncrossed again, so I don't put too much faith in that. MVRV on-chain cap versus realized cap. Again, this gets super volatile in a bull run. Historically, highs are all-time highs in price as well. We got close. We didn't get overbought territory like we did the previous times, but now it's going to drop way down to basically March levels. Again, this data isn't updated for today just yet, but when it does, this is going to drop way, way down. Transitioning to ETH a little bit, the grayscale premium is negative 17% on GBTC, and it's negative 5% on ETH. And I learned today it's negative 36% on ETC and positive 1250% on LTC. Bizarre situation going on there with everything. Certainly worth continuing to monitor. I don't really have any comments on that one way or the other. Here's the daily ETH cloud and the 200-day moving average. So ETH basically wicked to the 200-day moving average and into the daily cloud, way below the daily key June. Still sits below the daily key June. So this is part of the black hole abyss that I was talking about with those weekly charts. Previously, we've bounced where we should have every single time, and we still may do that today. I don't know, but anything above 3K would be ideal, and V-bottoming from there. But the difference now is I can't say with confidence that this looks like bullish trend continuation, right? I think that's pretty obvious all the way around. We didn't bounce where we needed to bounce if it was just a simple mean reversion. This looks much angrier than that, but it's still above the 200 period moving average. The 4-hour ETH cloud and 4-hour 200 look very much like the daily BTC cloud. You had your edge to edge move, you had your support at the 200, and then it just puked way, way, way below that very quickly. So again, if I'm looking for longs on ETH, on low time frames, I'm watching the 4-hour, I'm watching price position relative to the 200, price position relative to the cloud. If we can get above both of those going into the end of the month, Bob's your uncle, we're good to go. 3,800 plus, all-time highs, we get a super cycle, whatever, That is part of the decision tree. I wouldn't count on my hopium on that, but I'm not going to rule it out either. That's something you'd look for. ETH's moving average multiplier, 365 down here, 5 times the 365. We got close this time. We did not exceed it though. And there really isn't any precedence for this particularly. You could argue 2017 again, but it doesn't really look similar to me at all. Right now, that multiplier is sub 1200. So I wouldn't want to get into ETH in a big way personally until we're below that based on this indicator. Those are the buys that you look for. We're still closer to the top than the bottom based on this indicator. ETH's weekly cloud has so far bounced at the 20-week and the weekly Kijun. So this is reminiscent of 2017 BTC and looks safe, looks intact. Again, if we drop below this into the abyss of no support of anything, things are going to get ugly real quick. So ETH overall on the USD pair still looks pretty healthy relative to BTC, certainly. ETH-BTC probably needs a month or two of consolidation. I expect, based on seasonality, that this is the highest ETH-BTC is going to be this year. Q3 and Q4 for ETH-BTC has been bearish. Q4 has never been bullish, from what I recall. So I'd watch for a bearish consolidation here over the next couple months on ETH-BTC, and then a retest of 0.5 eventually, probably Q3, Q4. Lastly, I'll mention the Enzyme.finance portfolios I trade for Techemy Capital. You can see AUM, trades, allocations, what I do and when. No mins, no max. You pay gas fees in and out. You can deposit ETH or USDC into the smart contract. And I trade this one based on a mixture of TA and FA. The DeFi portfolio took a walloping over the past 24 hours. Some of this stuff was at all-time highs yesterday. Now it's down 40, 50%. Curve down 40%. SNX 34%. It's extremely bipolar. Those DeFi liquidations definitely help fuel that stuff. So these aren't for the faint of heart in the volatility side of things, so keep that in mind. But if you're curious as to what I'm doing, you can see it in the trades tab on both of these portfolios. So that's all for this one. Dislike, comment, share, subscribe, and happy trading.